Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, September 9th, 2019. A lot I want to cover in here, so I'm going to kind of move fast. I'm going to move through some things that I already covered today and just follow up on. As usual, we'll start out here with an overview of the broad markets, but I want to cover some sectors, a couple commodities, even some individual stocks. Just kind of a lot popping today. I had several price alerts fire off today after going through a period where I haven't had hardly any for a while. So there's some things moving. I'm going to get to those. So start out here with the broad markets and QQQ down, close the day down about a quarter point QQQ. So really what stands out to me, we broke out, the breakout's still intact. Really no follow through, since Thursday's breakout. You can see three candles. We haven't even yet, or at least QQQ, that tech heavy QQQ leading index has not even taken out. When you zoom in tight right here, this is what I want to show you. There was the high on Thursday. Remember I talked about the stop raid, stop pop, and we never even have yet to take that out. And as I mentioned last week, really not a lot new to report since Friday. The thing is, we've been, since the breakout on Thursday, the initial breakout there, we locked into this trading range right there, and I had the bottom of that range about 190, 128. So there was a trade to be made today. We actually fell down below that, and that triggered this sell-off, and then we rallied right about back up to it. I posted a day trading op in the trading room earlier today. Maybe I'll get to that if there's time. So, you take from it what you want. The breakout's still intact. I still think at the very least it will come in and backtest that breakout, and whether that happens tomorrow or not, it's hard for me to say. But I do think it'll happen, and there's a good chance that we'll fall down within the range, and then of course we could see a lot more than that. And if we do come into the range, I know I'm drawing a lot of lines here. The top of the range is a blue line there, about 189.40. So look for a test of that. Bulls want to see a successful test and then off to the races. In the near term, let's just say we don't back test it, then obviously you want to see a break above those highs. That could spark a rally there. Today, again, as I said, we fell below this very short term since Thursday trading range, and we closed right under it. So let's see where we pick up. Just kind of pointing out the salient levels here, and telling you this could go any way. So right now, we'll close the day at resistance, broken support. So that sets the stage for maybe a pullback to back test that level there tomorrow, maybe in the overnight session if the futures drop. If we get back into the range, then look for the next key support. Obviously I have some levels there, horizontal price support that may come in 188.37, but a back test this trend line. And that would be about it. If we drop that far, I think, and we don't bounce from there, we go much lower, then I think that would be pretty safe to say that we have a failed breakout, and that would be quite bullish. And then again, it could open the door to that waterfall type selling I talked about. But let's see what happens. A lot needs to happen, in more so in price than in time. Things can move fast, and that's why I like to do these videos and get these levels out in advance, because if we start breaking support levels, it takes quite a while to annotate the charts, get them out there, whether it's in video or even in a screenshot of these charts, and then adding all the notes that I need to add there. So that's what to watch on QQQ. Again, keep track of the daily charts. A lot of my trend indicators are still intermediate and shorter term trend indicators. A lot are still bearish, not all, but most. So there's still, and again, I'm still leaning towards the fake out scenario. I did a video today, and we'll get to that in a second, the futures, where we could pop a little bit higher. But again, to me, the risk reward, as I've been saying for a long time now, the upside seems very limited to me. So about from today's highs, what did I have earlier? About another 0.5% maybe on SPY and QQQ. And again, it's not really, doesn't mean we have to stop there if we do pop that extra 0.5% or so above today's highs. But again, it's not concerning me right now on my swing shorts, is what I'm trying to say there. Alrighty, next up would be, that's not it, SPY. SPY popped above and had a flat day, 0.003, that's flat. So same story, we've traded sideways now since the breakout in the S&P 500. We could have some divergences here again on the 60-minute chart. I'm drawing some lines here that are extended. If we happen to push up, and that would mesh with that scenario of about another 0.5% or so from today's highs, and then a reversal. Of course, the levels to watch on the downside, there's the bottom of Thursday's gap where we gapped up. See Thursday's candle about 296.61, give or take. I might have it set a little bit low there. And so if we enter the gap, both of those gaps on QQQ and SPY, I'm referring to Thursday's gaps, there's a good chance they'll be backfilled. And then if so, again, you want to look for the top of the trading range on SPY is 294. And you have a similar downtrend line here that may come into play. Of course, there's some horizontal price resistance or support levels that come in before we would make a back test of the trend line. So these are all things to watch for going forward. And take a look at the futures. Let me zoom in a little tighter here. This is NQ NASDAQ 100 futures. There's that range, the boxed in range from the last several trading sessions. Since Thursday, we popped up there. Sideways trading, broke below it today, and rallied right back up to it, which was an initial target for the day trade long that came a little bit off the lows today. Again, I posted that in the 1-minute charts. And then we never took out the top of the range, and if we do tomorrow, it's still a possibility. Who knows where we go tomorrow? I'd say that's that level I was talking about if you didn't catch this morning's video, about 79.25 on NQ. Now it's more than a 0.5% above. This morning it was a little about that. Now it's about 1% above if we get there. And again, that would give us we already have a divergent high, as I said earlier today in the video. And I said, we could reverse anytime. We had a divergent high here. We extended it to right here, and we've been moving sideways since. So we had negative divergence, and if we happen to pop another 1% or so from where the futures are right now, then you're talking we'll still just simply have extended the existing divergences. In other words, there's no way that the market can rally from where we are right now or where we close today. If it pops 1% tomorrow, we will 100% certain, with 100% certainty, still have negative divergence. It's not the be-all, end-all, but like I showed you before, wash, rinse, repeat. All these corrections came off divergent highs. Well, that one goes to the left of the chart, and so that's what I'll be looking for here, and that's why I still favor downside, even if we happen to pop another 1% or so from where we're at right now. ES. Same story, covered it again today in the video. You can see the divergence lines extended out here. So whether or not the divergence that was in place at today's highs, right, if you follow the horizontal line up, you can see there was a divergent high. And whether or not we move up a little or tomorrow or not, those divergences, they're either in place and will play out from there, or they will simply be extended tomorrow. We could put a little uptrend line right here and draw that too. Looks like a little wedge type pattern broke down there, and you can see it on ES, the big level to watch if you're a futures trader. Even if you don't trade futures, good idea to keep an eye on this. This is the top of the trading range right here at about 29.44 on ES, the S&P 500. So watch those trading ranges, or the top of the August trading ranges on NQ, ES, SPY, QQQ. They should all come in around together if it's back tested, but give or take. But you just want to watch all of those. Small caps were, the strong index today. I think they were better than 1% positive on the day. But there it is, like I said, divergent high. Also quite a bit of resistance when you look at the RTY chart. Nothing super heavy, but right here, all these reactions, this is a resistance zone right here, and we closed pretty much at the top of that resistance zone around 15.25. Why is that line there? There's reactions there, from reactions from above and below quite a bit within that range. So glass half full says IWM broke out, or RTY, I'm sorry, the small cap futures broke out and have moved up. And glass half empty says negative divergence right there, rally into resistance, and that breakout may fail. Or maybe we come in for another back test. That would kind of mesh too with that, call it the near-term bearish, longer-term bullish scenario, which says we come on in a little bit, charge up the bears, get some more shorts in, then we come back and back test the top of the recent trading ranges, the August trading ranges in the S&P 500, NASDAQ 100, maybe dip a little below, hit one of those support levels, and then rally back up. So that's the, like I said, we'll call it the near-term bearish, intermediate-term bullish scenario. Not my preferred scenario, but one I'm certainly open to, and I'll just watch how the markets act if and when we do come back and back test those levels. You know, do we see some impulsive buying, even reversals off those levels? Do the large caps reverse around the same time the small caps do, etc. There'll be a lot of stuff there. Are there divergences? Is there another trend line maybe that comes into play right here? I can draw one there. So again, these charts evolve. That's why I do these videos, you know, every day and sometimes more than once a day. There's always new levels forming, and sometimes I might see something that I missed. Here is IWM on the daily chart. As I said the other day, of all the indexes, if the if the bull scenario plays out, if we're not going a lot lower, if this market's going to new highs and beyond, as I said the other day, my pick would be the small cap index, because it's the most bullish looking chart on the daily time frame. We have, first of all, it's well off its highs. It peaked back in late in 2018, unlike the others. The large cap indexes, you have a well-defined downtrend line, and you have a divergent low right here, bullish divergence on the daily time frame. So if this one's in early stages of a bear market, then these divergences just may not play out, such as negative divergences often don't play out within a bull market. So either way, one to watch. And again, I just showed you a minute ago RTY, the small cap futures at resistance. Look at that line right here. Lots of reactions on this level. Let me brighten it up for you. Turn that level on. Let's see, edit. I can make that line. I can give it a color so it pops out. 152.70 is about the top of that trading range. I have another line just below it, just like I had a range on RTY, the futures, and you can see those levels there. So undoubtedly, the small caps are at resistance. Quite a bit of reactions along those levels there in the past. Gosh, going back for at least a year now, and so that's an important level. If it pops there, then it has just as important probably as that downtrend line, and then another big level there about 159.41. So the small caps definitely have their work cut out for them. Now, if they can power on all through these levels, then that's pretty much smooth sailing, I think, above 160 or so. But quite a bit of work to do before we get there, and otherwise you get rejected. It's just another bounce up to resistance and a failure. So here's one to watch. But again, the small caps are only going to go so far without the large caps. If the large caps break down, fail the August trading range breakouts, go way back down in the range, and then out below through the downside, IWM is not going to break out above 160 and continue up. That I can tell you. Okay, I covered CL crude futures this morning, and I talked about USO. I don't know if I got to the chart, but I think I did. Maybe I did in the video. Either way, it broke out, as I said, above this downtrend line right here. So it had a breakout, but yet we're also at resistance. See that 1206 level? Big resistance level right there. Why? Lots of reactions. Reactions there, reactions several there. Finally broke out right here, and it back tested it for a while and fell back to it. Held that support level for a while and then gave it up with a big impulsive move down. Traded through it a few times there, but still a lot of reactions along that level. So we're at a pretty important level in crude. So yes, broke the downtrend line. However, it had horizontal resistance right ahead. Pretty good resistance zone right here if it does pop anymore. Bullish divergence, everything in the chart. I've talked about this going back last few weeks. In fact, I highlighted the energy sectors as having these bullish divergences as well. Here's XLE. This is the main energy sector. Your integrated oil companies, big oil like Exxon Mobil, Chevron, Texaco, BP, those kind of companies. So there it is. It's rallying up after divergent low right here. It had positive divergence on the daily chart, coming up on big downtrend line resistance. So again, whether or not oil continues to rally from here will most likely depend on what the stock market does. If the breakout we just had above the August trading ranges fail and the markets take another dive lower, a pretty big dive down, oil's almost certainly go down with it, and then these patterns aren't going to materialize, or maybe there's a little more upside before that happens. We run into these downtrend lines, and then they give us another rejection just like we've had in the past. So we'll see. Something to watch for sure. There's trading ops as long as the music's still playing right now on the long side, that is. You can jump in. However, be careful. You know, there was a big rally in a lot of the energy stocks today. This is XOP, one of the three energy sector ETFs I follow. Like I said, XLE is the big oil, integrated oil companies. This is the oil and gas E&P ETF, and you can see right at resistance. So quite a few stocks, you know, moving today, you know, to make this ETF, the sector up almost 6%, but rallied right into pretty well-defined downtrend line resistance. So if this breakout in crude, just like the stock market, proves to be a false breakout and it's going to reverse soon, then you'll probably see a rejection here. Maybe they'll even pop this trend line and give us a bull trap in the energy stocks. I don't know. It could be the real deal, but we have resistance right ahead, and like I said, they parked it at the close right at downtrend line resistance in XOP today. But again, big divergent low. I pointed this out recently that we were building divergence here. So if it's a real deal and the stock market and oil has some, you know, upside to go from here, this sector should outperform. It should outperform the market and provide a lot of trading ops. You can see, you know, my next two targets if it breaks out up here. I'm just right now kind of wait and see mode. Wait and see what the markets do this week, if they follow through or fail last week's breakouts. Same story on XES. That's the oil and gas equipment and services ETF. Downtrend close, rallied right into downtrend line resistance. Big divergence, big bullish divergences, as I highlighted a couple weeks back on the daily chart. However, 832 is a pretty big resistance level, actually all the way to 832 down to about where we closed, because I could see this gap right here. There's a gap, top of the gap. So 815-ish, about to where we're about from where we closed to about up to about 832. If it can punch through there, then you can see the next couple levels are way up here. So potential there, but it depends. You know, these energy stocks, remember, they're in a bear market. In a bear market, you don't trust bullish divergences and bullish chart patterns as much as you do in a bull market. So you have to keep that in mind. However, it's pretty powerful stuff. You even have these divergences here on the weekly chart. You know, Saudi Arabia is obviously trying to pump oil prices up for the big Saudi Aramco IPO. We'll see if that if they're effective in doing that. But again, charts are the charts, so these are levels to watch, and that would be, again, a lot of even if it's a bear market rally. That's the thing. We have, let's say we break above today's highs, take out the trend line, rally all the way up here. That would be an obvious bear market rally target. That'd be a 56+% rally. And again, I've said it before, this is why I love bear markets, and I welcome the next bear market in equities, because they're phenomenal to trade. You can make just as much money, if not more, trading bear market rallies than you can on the dips down in a bear market, down the major legs down. So make no mistake about it, this is a sector clearly in a bear market. So when I showed you a 56% rally, you probably say, Randy, that's a bull market. No, this sector's already dropped almost, you know, over 87% off the 2014 highs. 56% is just a run-of-the-mill, you know, bear market rally. So that's possible. So we're going to keep a close eye on oil going forward, and the markets. Maybe oil rallies and the markets go down. It's certainly going to provide a headwind for the energy sector trade if the broad market drops. If nothing else, because also you know, XLE, the energy sector, is one of the 11 sectors within the S&P 500. So. Get more bang for your buck trading these XES, especially with the setups now, and XOP, because a lot of these stocks have been priced for death. And there's your downtrend line wedge on XOP. So enough on that. Let's move on. We'll just keep an eye on this. And again, a lot of them closed right at or near resistance today. One of the members in the trading room pointed out CHK. Remember, we took a shot, had an official long trade here. That was not too long ago. It broke down below, had a stop at 175. It broke below the stop, so we were taken out of that. But it, like a lot of these energy stocks, it went into, it had divergence. That was the whole premise of the long back here, wherever we took it, because it had bullish divergence there. Maybe it was right here. I'm trying to recall exactly where we entered, maybe up here. Those divergences have been extended, and look, they finally played out. Sometimes that's the case. So big move up through, forget about all these numbers now. I mean, you could still target that level. It took out the 175-ish resistance today on that big move up, And so if there's more upside in the energy sector, this one certainly could go on to hit those targets that I had on that last trade there. So I just wanted to mention that because someone else brought it up within the trading room. And speaking of recent trade ideas, this one's kind of dropped off my radar because it just moved sideways so much. Someone else mentioned Fizz in the trading room today. I still very much like it. When I look closely, I must not have had a price alert because I didn't realize this one was stopped out. I had a max stop. I have to look at the chart. I don't think it was based on a daily close. If it was, and that's what I probably should get in the habit of doing that to almost all the trades now, this is a classic stop rate. You know, there's the price targets. We already hit the first target in Fizz, and I had these second two targets. We had a breakout here, this downtrend line, rallied up, hit my first target right away. Had a stop under, looks like 38.49, and that was strategically set. Strategically set, so it would be because we had nice support right around this level, and I figured they'd take it down for a little stop rate, so I gave it a cushion. But look at that one candle, and you look at a 1 minute chart, and they pulled it down. To me, this is a very, very clear and obvious stop rate, and that's going to happen more on a stock like Fizz than Microsoft. Microsoft is a $1 trillion company. The biggest hedge fund in the world would have a hard time taking it down that far to blow the stops, to have a stop rate, because you just need an insane amount of capital to take it down. But a smaller stock like Fizz, it's possible, and I have no doubt that's what they did. They took it out because you could see it had well-defined support, and so all they had to do is pop it down there, clear all those stops, then go long themselves, and everyone else is selling on the stop loss orders. They turned around and buy, and boom, the stock had a 9% up day today. But bottom line, I'm highlighting it now because it still looks good. It just went on to make another divergent low. So if you are in that one, if you gave it a little extra room, or you're looking at it now, if the market can hold up, and then this one should have more upside to go. Okay, all right, let's look at some trade ideas I posted today. Anytime in the trading room, if you click on somebody's gravatar, their little image or their username, like click on mine right here, remember that'll load all posts by that person. So if you want to just see what I posted today, you scroll down through here. Chronologically, here's everything I posted, and I wanted to share this trade idea for members into it. I'll get to that in a second. First one I posted today is in the swing trading group. Oh, and by the way, guys, I should mention this. I'm not actively posting in anything anymore other than, for the most part, swing trading and day trading, because a lot of these fall on related categories. For example, I might have a swing trade idea on a mining stock, and I can either post it in that group, but then it's not going to go into the swing trading group. So I may retire these other groups, but you'll just notice I'm not actively posting in these because of, a setup in the futures. NQ, NASDAQ 100 futures, could also be traded with QQQ. So I think it's easier to just say that's a swing trade or day trade idea. And to that, I posted in swing trading group earlier today, this one. PAGS offers an objective short entry. I had a price alert on this. This was one of several price alerts I had fire off today, and it was breaking this downtrend line on the white uptrend line. I said it would offer an objective short entry on a solid, meaning an impulsive break, and that would also take it under that 48.75 support level. And that was then. This is now PAGS. It certainly took that level out with conviction, and you can see this is technical analysis at its finest. Went down, had a momentum fueled overshoot through that 47.05 support support level I had, parked right on it. So it's fine if you didn't get that one. That's again for gold members. It's an unofficial trade idea. I may make this official. Closed down 9%. It was down about 5% when I posted it earlier, but it's right on support. So any more downside tomorrow, move under that $47 level should do the trick, especially a move under today's low right there at the bottom of that candle. And you can see these are my targets. 43.27. It's unofficial target. That's the actual support levels, meaning you set your stop or buy to cover limit order a little bit above it, slightly, maybe 43, let's say 35, 43.40 on that one. And then ultimately I think it goes down to the downtrend line. This would be my preferred target. I think it works something like this. This is how this one would look. Get a reaction there. And if the trend line breaks, then I think it comes all the way down here to about 31.83. So that, to try to give you an idea, that would be as much as a 32% drop on PAGS. Divergent high, trend line break, everything I like to see. Had another alert fire off on. Oh, by the way, this is in the tech sector. It's a software stock, and then I had a member in the site mention that we had They inquired about the software sector ETF. Let me see if I can find it for you. 1 second. I'll go here. Software. And there it is, IGV. Okay, no, I've never traded IGV. So they asked about that, and absolutely, you can see IGV right here. Let me see if I didn't add any lines to there. Like everything else, tech especially, a lot of things you have this trend line, QQQ, everything else, that trend line off the lows on December 24th. We're right on there. So big red candle today. This sector is primed. We've already had an impulsive leg down before. And so if you look at it this way, remember I was focusing on these trading ranges for the markets right here, the August trading ranges. Well, here's a sector that broke out and so far had an impulsive failure. This is what I want to see on QQQ and SPY. And then, of course, we need to see that trend line go. If so, we're going to see the software going down. And this is a big component of the tech sector. So if this chart plays out, if we get this sell signal, we need a little more downside, an impulsive move. It'd be nice to see that 200-day EMA go, that red line there as well. And then there's going to be a lot of shorting ops. So the one that I just showed you, I actually had the price alert first on PAGS and another one today. I had two software stocks give me price alerts that I've been tracking. Intuit. Intuit, they make TurboTax, Quicken, all that stuff. There's the beautiful little bearish rising wedge. And this chart, or this stock, behaves well to the technicals. So I'm giving you trade ideas here, and also covering, the software sector. Rising wedge, we had alternative trend lines on this one. Divergent high, everything I like to see, breakdown, and it traded sideways for a while, and then finally the correction ended here. You had a little small rising wedge here, beautiful little with, yep, got it, negative divergence, everything I like to see. Boom, and what was that good for? From highs to low, that was a drop of about 13%. And we pushed on up from there after that 13% drop, and we've set up into this larger bearish rising wedge pattern right here, complete with negative divergence at the highs recently right here. Actually, the divergence line on this should really be drawn from, oh, you know what? No. It actually, there's two. There's the bigger divergence line right here, right there, and that extends from that first high. And then, of course, you have this smaller divergence line right here, most recently with the PPO really dropping off and the RSI there. This one closed right on there. There's an example of why, sometimes you might want to wait, especially when you're so oversold. It took the stock, well, we closed down 4%. It's a big move to get there, especially on a company this size. So any more downside tomorrow, or if it pops up tomorrow, that's fine too. Let's just say we closed on, even though it was a hair below, we'll say we closed on support. So whether it pops up and then breaks down, or we continue down tomorrow, there's first target, second target, and let's just leave it at that for now. So that's 290, about 240 or so, and that would be a drop of about 12%. That's Intuit. And the point being, that's in that software sector. Now, one more takeaway from this. If Intuit breaks down tomorrow, but that, I forget the name, I should have wrote it down, that tech software sector ETF happens to hold above that key trend line support off the lows from December 24th, then you could have a false breakdown here. Maybe you go on to back test. So when trading a stock within a sector, keep an eye on the sector or the sector ETF itself, because you want that to confirm the breakdown. If it does, then this one will probably continue down. If this one breaks down tomorrow, but then that sector ETF holds support and starts to rally off that trend line, then you'll either probably back test here or come back within the wedge and it'll be a false breakdown. It is possible for this one to play out, but it just puts the odds against you if the sector is not confirming that. And yet another one mentioned by a member in the trading room. By the way, guys, I thank you for the a lot of the trade ideas I get, or trade ideas that I have and I fall off my radar, like Fizz, for example. You guys ask about updates, and then it brings it back to the forefront. And somebody brought this one up. I traded this one long and short many times over the years, IHI, as well as the individual medical device stocks. And they trade very well. Big moves, a volatile sector. You catch it on the upside, there's a lot of money to be made. And when you catch it on the downside, a lot of money to be made. And it's setting up. And this is why I remain bearish on the market despite that recent breakout. I'm seeing so many sectors poised. Healthcare took it on the chin today. I'll go over some healthcare. So I could sit here and talk all day. I saw a lot of stocks moving today, but this one you can see it's come full circle. And whereas before, we had a big, clean up trend line, negative divergence right here, and that was a drop of, just to try to give you an idea how much this sucker can go down, and that's a bull market correction within a bull market of about 20%. A lot of money to be made on that short. Came here, had a small divergent high, didn't really have an uptrend line or anything, and it was just a run-of-the-mill correction within an uptrend. It was still a drop of about 9%. This time around we have a nice clean up trend line just like we had back here, meaning this one's extended. This is an extended rally, negative divergence. Divergent high 1 shot across a bow. We have divergent high 2, big red candle today, bearish engulfing because all you have to do is engulf the body of the previous one, not the skinny part, not the shadow, just the body. So this big red candle engulfed that body. There are two ways to play a bearish engulfing candle. Number one, you want to see them when they come at the end of after a prolonged uptrend. So for example, you had a bearish engulfing candle right here, and it was good, it identified this top for that correction. It was, like I said, 9% drop, I think. You want to see, well, you can short the day of a bearish engulfing. It's a little aggressive, but you can take a short when you see that candle with a stop just above it, because bearish engulfing should be a topping stick. So if we go above it, then it pretty much negates the whole bearish nature of it, right? So there's one option. Now in this case, you might want to hold off because we came right down to just above key uptrend line support. But again, if you took it, great, there's your stop. And then the other option is to wait for a confirming candle the next day. So maybe you do a half short today, for example. I know the market's closed. You could still probably trade it in after hours. And then wait till tomorrow if you have another follow through red candle. And actually tomorrow would be great. But let's just say this trend line wasn't there. I like to see a confirming red candle. And sometimes they'll move it up intraday, but you close below. I want to see, when I see a bearish engulfing after an uptrend, I like to see a confirming red close, or confirmation with a red close the next day. 2 red closes, all the better. And there was a big drop after you had that. So this is what we're watching for on IHI. And if I forget to, don't get around to making this an official trade tomorrow, what I'd be looking for. And that is, again, if there's more downside, especially if we're going to close, especially if we close below the trend line, or intraday, it's very impulsive and it looks like we're almost certainly going to get a close. Sometimes you get these little whipsaws like that if you break down intraday and you close back above. So there's a setup, and just from the look of the wedge, this thing's ripe, ready to break, but a little more nudge. And whether or not it plays out or not will probably largely depend, will largely depend on what the broad market does. You can also see some support right here. Targets, I'd have to zero in on this. I haven't really updated this chart. I'm going to tell you right there is a reaction high. That would probably be the first target there. Well, first one there is about, you can see 239.38, 234.40 unadjusted targets, and then maybe all the way down here to about 227. So there's another setup for you, IHI. And if I get the time tonight, I'll comb through, as well as the software sector, looking for individual setups that might have even more bang for your buck on individual stocks within those sectors. Oof, long video. Like I said, a lot of stuff I wanted to get out. Did the updates earlier today. These guys are still, somebody asked me, Randy, after, in the trading room, did you close out your shorts yet on the metals, your hedge? No, I haven't, but I'm ready to. They're close, very close. Silver, like I said earlier, I have it coming down to either, this is a support zone. This wedge might widen. I could see this, and that would probably happen if the market rallies. So I see at this point minimal downside before a decent rally, but if silver breaks out, especially along with gold above this downtrend line, that could spark a rally. So again, was covered this morning. We're working our way down within this bullish falling wedge right here. The lower line is just your divergence line, so that can extend. It can look like that, or maybe the divergence is enough right now to spark the rally. So we'll watch this. Kind of looks to me like it wants another thrust down, and before it breaks out, and that would call for probably a rally in the equity markets overnight, and the stock futures maybe into tomorrow as well. And then so I'll be looking. So one way or another, I'll be looking to remove those hedges soon, either on a breakout, impulsive breakout above here. Maybe if we take out 18,381, that's a pretty decent support level or resistance now. Just wanted to point out that these guys are getting probably close to a point where we're going to get maybe a tradable counter trend rally. What is that? GLD or GC, gold futures. That's the longer term chart. I wanted to get you a 60-minute chart. If I have it here, there it is. Same story with gold futures. I start out with silver. This is gold. There's your downtrend line. There's your divergence line. So you have this bullish falling wedge right there, positive divergence. If we go down a little more, we'll certainly keep that divergence intact. If we popped under 1501, I suspect we'd probably get a reversal. It might be a false, flush out move. Either way, if you are short gold or silver, one thing to do too is just trail your stops down. I mean, maybe we break that support and keep on going. Remember, there was a lot of hype and overbought and over bullish conditions in gold and silver and all that. If the stock market rallies from here, if it rallies tomorrow and into this week, you could see this scenario here. So, in that case, you could, if you're short gold, you could just trail your stops down and let your winners run and, protect your losses or protect your profits, I'm sorry, if it kicks back. If it does break out, maybe it proves to be a false breakout. Like I said, you do have resistance not far overhead, about 1522 right there in GC. And finally, sorry for the pause, I was looking for this chart here. There it is, a ZB. They're actually right now about at my target here, this target, or this support level. They could certainly go lower again. There was a big bubble there, a lot of hot air to be let out, but bullish divergence at support. In fact, I'm going to, as soon as I end this video, I will tighten my stops up on that one, or maybe just pull the plug, just cover it, cover that short. It's very profitable. And again, it's served me well with the breakout in equities recently hedged against my equity shorts. But again, this one's coming up to support and bullish divergence, so probably going to get a pop here soon. If it breaks below, that's what a trailing stop will do. It'll keep you in the trade if there happens to be more downside in treasury. Okay, guys, I'm gonna have to wrap it up here because, like I said, I saw a lot of things popping today. There's cocoa. Well, I should have said that was cocoa. CC broke out above that trading range, covered in today's earlier video, and coffee too broke out. There's that downtrend line. There's that 97.73, almost up to that 99.52 level. So these guys, these ag commodities may be ready for the next run up here. So that's something we'll be watching to this week and going forward. All right, I will wrap it up here. Again, lots to look at this week, and I'll keep these updates as frequent as needed, and maybe get some official trades out to you soon. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.